Greetings, everyone. I have some questions that I'm going to answer that came from our community. So if you are listening to this, one of them may have been by you. I'll take them one at a time, and they'll be separated out by the team so that you'll be able to type in the content of the question, and it should pop up some of these questions for you that you can listen to at your leisure. Question number one, I have a client with land and is considering four fourplexes versus one 16-unit apartment complex. Do you like the idea of one over the other in theory? So I think this boils down to the loan product. If we go conventional, the terms are going to be fixed and they're going to be more favorable, versus if we look at a commercial property, you will not get a fixed interest rate. You're going to get maybe a 30-year amortization to help with some of the cash flow, but the term is going to be an ARM or a balloon feature. I think overall, the fourplexes probably are especially if you're just getting started in real estate, the fourplexes is probably the better way to begin. More often than not, we find, and I agree with this philosophy, that investors, again, just getting started, it's better for them to get their sea legs on the residential side than jumping right into commercial. It's a very, very different animal. And further, on the commercial end of lending, those loans are a little bit funny in that they want to see that the investor has experience in real estate investing, right? It's kind of a catch-22. How do you get experience in real estate if you can't get the financing for the commercial loan? So anyway, I would say that just in theory, without having any other context, I'm going to go for the fourplexes. The other thing that I would say about that I didn't mention already is that the exit strategy is going to be a lot easier selling individual fourplexes than maybe one entire 16-unit apartment complex. Okay, question number two. What steps can we take to be lined up for mixed use or small commercial mortgage? The answer to that question is get ready for commercial financing and get your ducks in a row to understand what the criteria or the requirements are, one, about the property, and what is probably going to be required from you. More often than not, what you can expect is the property is going to have to yield a certain debt service ratio. Generally on commercial, that means a division of the income that the property is going to produce divided by the expense of the property. Usually you want to see about 1.25 or greater on commercial loans within that division. We also want to see 90% occupancy. That's pretty common on the commercial side. And as far as you're concerned, they're going to check your credit. They're going to want to see that you have good to decent credit. But really for you, they're more interested in your liquidity, right? What kind of assets do you have available should the property need repair or vacancies or that kind of thing, if it's a recourse loan, of course. Hopefully that answers that question, Roberta. Thank you for that. Next question is, can I report my tenant's rent payment history so they can raise their credit score to buy a house? This is a good question. I like this. Donna, thank you for the question. I think the answer is yes. I know that the repositories, these are Equifax, TransUnion, and Experian. You guys are probably familiar with those names. They have, as of late, allowed utilities to be added to an individual's credit profile. If those payments are made on time, it should be able to boost the individual's credit score higher than it was before because you've got more depth of credit, on-time bill pay, etc. I think the same will apply for a renter to go ahead and show that timely rent being paid to boost a credit score. Not sure exactly how you want to go about doing that. I would call one of or several of the repositories if you need those numbers. Maybe Google it. Otherwise, feel free to give us a call and we can provide that for you. I just don't have it by memory. Thank you, Donna. Next question. Let's see. Will a lot of cash reserve help you with loan approval when your income is low? No, it won't. Not directly related to, say, conventional financing. Debt to income ratio, having to do with income or low income in this example, and reserves or assets are going to be totally separate, part and parcel from the other. The only time that that's going to be relevant is if you go outside the conventional lending box and you look at a non-QM product or a debt service ratio product, maybe a bank statement product, where assets and or reserves can have a bigger play in qualifying an individual or have those compensating factors as means of qualifying. But for just a conventional loan, it's one or the other. Now, I can tell you that low credit scores on a conventional side can use compensating factors like strong assets or low debt to income ratio. That might be a compensating piece that would apply when we're looking at a Fannie Freddie type conventional loan. Next question. Let's see. What are mixed use or commercial rates compared to residential? This is going to depend on the property, the commercial property, and what its debt service is. That drives a lot of the interest rate on a commercial loan. I would say on average, you're probably, and property type, mixed use will probably have a slightly higher interest rate than, say, an apartment building would. If for those of you that are not aware, Fannie and Freddie actually have commercial loans for 5+ unit apartments. The underwriting guidelines for those are extremely restrictive, but the rates are going to be better. But the comparison in rates, I'm going to say 0.5% to 1.5 is going to be on average what I would say for the difference today between commercial interest rates and residential interest rates. Remember too that the terms are very different. Residentially, you're going to get a fixed rate option. Commercially, you will not get that fixed rate. I answered this question moments ago. You can usually get a 30-year amortization, which kind of bleeds out the payment schedule, keeping the payments low, but you won't get a fixed rate on a commercial loan. And then the final question is, do you lend only on 1 to 4 units? No. Rudy, the answer is no. We lend on all types of property, from residential, which is single family to fourplex, to commercial, which is 5 units and above when we're talking about housing, to mixed use, which I've been talking about today, storage units, condos, strip malls, all of the above. We really do have a very diverse product line for investors in pretty much any property type that you're going to be looking at. We will not lend on bare land. Mobile home parks are getting pretty tricky. We're seeing some issues with those. Otherwise, commercial and residential as a whole, we're pretty well set to fund on whatever the type is. That's it. Thank you guys so much for listening. Hopefully there's some more good intel for you to extract and education to pull from this few minutes that I spent here recording these. And we will be seeing you soon, I hope, within the community every Tuesday at 1:30 Pacific or 4:30 Eastern. Talk to you soon. Thanks.